Hey everybody, Rebecca here to talk some options trading with you. I have recently gotten back into selling options, and some of you were interested in hearing about the options plays that I'm going to do and what my overall strategy is for options trading. So that is what this video is going to be about. And if you're new here, I need to go into some context first. And if you are new to options trading, then you may have heard that trading options is risky and dangerous, and it can be. That is true, but y'all, driving a car is also dangerous, and that is how I tend to think about things. It's risky to get out there on the interstate and drive a car, but you can choose to do so safely to mitigate that risk, right? So that is how I view options, and mainly I stick to selling options. I am not a buyer of options, and if you cannot tell me the difference between selling and buying options, then don't come at me in the comment section talking about how dangerous options trading is, okay? Okay, as for my own personal strategy with options here, if this happens to be your first video on my channel, some context is necessary first. So for reference, my overall life goal here is to reach financial independence and retire early. That is what this whole channel is about on YouTube. I'm showing my journey to get there. I am 37, living in North Carolina, and yeah, my goal is to eventually reach financial independence and retire early and move to Sweden to live there with my husband, who is Swedish. And as of the time that I am filming this video, I am approximately 40% of the way to the net worth number that I have in mind to call myself financially independent and retire early. So if you're interested in following the journey here, then subscribe down below. I'd love to have you. As for options for me, my overall strategy is to basically just get a little icing on the cake as far as returns go for my investments. I am going to be a seller of options, meaning I will sell puts and I will sell covered calls against shares that I currently own. And I'm primarily going to be sticking to around a delta of 10 to 20% maybe at most, because I will primarily like to follow a no assignment strategy if possible. It depends on the situation and the holdings that I have. So as I mentioned, I am eventually going to fire in Sweden and move there and live with my husband. I am recently married. I got married in January of this year, just a few months ago. And my overall fire strategy has recently changed. This Sweden plan is a new thing. So because it changed so recently, I am farther along on the fire path than what I was planning for previously. So given that I am 40% of the way to my fire number, I would like to overall reduce the amount of risk, volatility, and speculation that I have in my portfolio. I'm going to use options to help me do this. So I will explain here. In my portfolio, I have a lot of speculation and higher volatility things in there right now, which before with my old fire plan was fine because I had a longer time horizon. But now that that time horizon has shrunk somewhat, I'm going to be reducing some of these positions. And mainly what I'm talking about here is I own all of the ARK funds. Those are speculative and volatile. They have also been down a lot as of recently. Most things in the market are. I also have a Hyliion position. I recently added a new position that is more of a speculative play in Agero Clean Technologies. I also have some Bitcoin and Ethereum and a little bit of Dogecoin, so some cryptocurrencies. And I do also have TQQQ, a position there in my Roth IRA. So all of those things are highly speculative and volatile. I did also have a MindMed position in my Fidelity taxable account. That position I had held for a long time, and I had been doing options trades with it on the way down because it struggled a lot too. But I earned so much premium in that position that I was actually profitable with my MindMed position, even if that company had gone bankrupt. And given that I wanted to reduce my overall volatility and speculative plays here, I decided to go ahead and sell out of the MindMed position and use that money for something else. So that is one more risky speculative play that is now out of the portfolio. As for my ARC funds, they are held in a taxable brokerage account, and my plan there is to get my positions in those various ARC funds up to 100 shares each. Some I have 100 shares in right now, some I do not. So I am currently working on getting all of those positions up to 100 shares, and then I will sell covered calls against those shares to eventually have all of those shares called away from me, but I will also be profitable on them. That is the goal. And I will show you guys what plays I have on currently in just a few. So I'm working on getting my ARC positions all the way up to 100 shares, and then I'll sell covered calls on those to get those shares called away. That's going to be the same strategy that I have for my TQQQ position in my Roth IRA. Given that that ETF is triple leveraged, it is also down a lot as the market has come down in recent years. So this position, I have about 130 shares in TQQQ, and so I am selling covered calls against the 100 shares that I have, and I am working on getting to the next 100 shares for the rest of them. And again, I will be buying more and averaging down my cost basis since everything is down right now anyway. And then when I get up to 200 shares of TQQQ, I will sell covered calls against both of them, and eventually those shares will get called away from me at a profit. And this will allow me to be consistent with my strategy with options here, which is to reduce my overall risk and speculation and volatility in the portfolio, but I also want to be profitable while I'm doing that. If I can use options to earn some premium as I'm getting rid of these positions in the long term here, that's great. Why not earn some extra income from these shares while I can? I won't be totally getting rid of all of the risk and speculation in my portfolio. Like I mentioned, I just recently added a new position in there, the Aduro Clean Technology. So I'm going to keep accumulating some shares of that. I only buy shares of Aduro with my credit card rewards that I earn from Fidelity every month. So really, in my mind, it's kind of like free money, and I'm just throwing these credit card rewards at Aduro just to see what happens for fun. So that position I'm going to hang on to. And I'm also going to hang on to my Hyliion position for a while. I just want to give both of those companies really a chance to prove what they're about. And I think both companies need more time to do that. This is not an easy market to be a publicly traded company in right now by any means. So yeah, those two positions I'm going to hang on to for a while. And I am not writing covered calls against the shares that I have already, just because I feel like both of those positions have the potential to shoot up quickly, and I would rather just hold for the time being. Same thing is true for all of my crypto positions. I am just going to hold those for the time being. I think between the Hyliion, my crypto, and the Aduro Clean Technologies, that is more than enough speculation in my portfolio. I'm willing to let go of my TQQQ position and all of my ARC funds as well. So to me, that'll kind of balance out the portfolio a little bit and get rid of some of the high volatility, high risk, high reward stuff. So that is what I'm working on right now as far as options go. And after I get these ARC positions gone and after my TQQQ position is gone, then what, right? And this is where I'm kind of a little bit up in the air about what I should do next. And if you're into options, I'd love to hear some feedback from you down in the comment section below. I am considering, within my Roth IRA, I'm considering doing some wheeling of the iShares version of the total stock market or the S&P 500. So that's SPLG and ITOT. And right now in my Roth IRA, I have VTI and I have a few other Vanguard ETFs in there. So my debate is, should I just continue to build up the 100 shares in all of my Vanguard ETFs that I already have, or should I sell my VTI position and use that money to start wheeling ITOT or SPLG. I'm kind of up in the air about that, but that is something that I'll figure out later after I get these ARC funds and everything else dealt with first. But yeah, right now I'm kind of leaning towards just continuing to get my VTI position up to 100 shares and just holding it. Maybe I'll write some covered calls, trying the no assignment strategy once I get to 100 shares. But yeah, I have been contributing to a Roth IRA for years now, so my cost basis with VTI is currently profitable. So I hate to just sell out of it and then start wheeling ITOT, for example. So yeah, longer term, my option strategy is a little bit more foggy, but as of right now, I know what the plan is and what I'm working on, and that is to get rid of some of these speculative, highly volatile positions that I have. So with all of that said, let's take a look at what plays I have on currently. Okay guys, here we are looking at the spreadsheet that I use to keep track of all of the options plays that I have. This is not a spreadsheet that I created. I do not have this level of skill with spreadsheets. If you are interested in where I got this spreadsheet, I will link to it down in the description box below, so check it out. I will also link to some videos that I personally have enjoyed when it comes to learning about how options work and what the wheel strategy is. I will link to some of my favorite videos that I have watched down in the description box below if all of this is new to you. Options can be very confusing at first, and it was for me too. I still am very confused by some of the more advanced strategies out there. I by no means consider myself to be a pro at options trading, you guys. This is just something that I'm kind of learning by doing in a way. So yeah, all of that said, let's take a look at what I have on right now. And as y'all can see, I only have 3 plays that are currently cooking. So let me switch over to the details sheet here, and y'all can see what I have done here. So right now I have a covered call on that I sold for ARC-X, ARC-F, and TQQQ. So these are the dates that I opened these contracts. These are the dates that they will expire. And this is the strike price that I chose for each of these positions. And this column in here is the amount of premium that I earned for selling these contracts. And y'all can see the premium for the ARC-X there, massive, $10. But it doesn't matter to me. These are shares that I'm trying to get rid of anyway, so I'll take what I can get as far as the premium goes. And if this contract expires worthless and I keep these shares, then I'll just turn around and write another one when I can and get some more premium until eventually the contract does get exercised and I get all of these shares that I have in ARC-X called away from me. That's the goal. So yeah. As far as the premium that I earned from selling these various contracts here, this is the amount of premium that I earned that's cooking right now. If all of these contracts just expire worthless, then I'll earn the total of $147.02 for all of these options plays that I have on. Now, once they become profitable, then eventually I will close them myself, so I won't get this full amount here. I would rather just close the contract and reopen another one once I get to a good profitable level on all of these. So as of right now, everything is just sitting here, and this is why I am not counting my options premium that I have cooking in my extra income report videos. I'm going to wait until I actually close the contracts, and then I'll only include my realized options income in those videos. And that's what I like about this quick view tab here. This page here shows your actual realized income for the year so far. And as y'all can see, I mean, I just recently got back into this and I have no realized options income as of yet. So rule number 1 with doing the wheel strategy with options is not to select a strike price, a sell price, below what your cost basis is for whatever position it is. So that is a rule that I have followed, except for the ARC-F position here. My trouble with the ARC funds is that I was buying ARC funds on the way up during the euphoric stage a couple of years ago, and I did continue to buy on the way down. But overall, my cost basis for ARC-F here, we can take a look at this position down here. My cost basis is $24.64, and the strike price that I chose was $21. Now this is going to expire on July 21st. I did not think that the ARC-F would make it up to the strike price of 21. Right now it's at 19.45. I could be proven wrong here, and if I just let this contract get assigned to me, then I will be selling this position for a little bit of a loss. So yeah, that is why they say to not sell your covered calls below whatever your cost basis is. But at the time I put this play on, there was just no premium for a strike price above my cost basis. So yeah, I took a risk to sell one that was a little below my cost basis, thinking that ARC-F will likely not get to 21 or above by the expiration date that I chose. We'll see how that works out or not, to be determined. So I am planning on doing monthly reviews of the options trades that I have on and what I've been doing. I'm not going to be the type of options trader that does this stuff weekly. With me being a third shift worker in healthcare like I am not the type of person that really can watch the market consistently all day, every day. I really need kind of a hands-off strategy for me in my life situation. So doing the wheel strategy is something simple that I can do that I don't really have to babysit a whole lot. So that's just another reason why I like it for my situation. My other two plays that I have on right now, ARC-X and TQQQ, the strike price that I chose for those are both above my cost basis. So we can take a look at that. The ARC-X here, my cost basis is $15.66. The strike price I chose was $17, and this was a later expiration date. Again, the premium was just really not there, and like I mentioned, I don't want to have to babysit a whole lot and really keep an eye on the market in case something goes in the money that I would rather not go in the money. So yeah, that's where I'm at with the ARC-X. And for TQQQ, my cost basis currently is $41.09, and I have 132 shares of TQQQ. So I have one covered call contract on at a strike price of 45. This one does not expire until December. Again, it's a long way out, but it is above my cost basis. So this one, if it gets assigned, that's fine. Those 100 shares will be gone. And in the meantime, while the current stock price is still below my cost basis, I am just going to be accumulating more shares to try to get to 200. And then I'll start selling contracts on the other 100 shares to get those called away eventually. Right now, with the market being down, it's kind of a good thing because I can get these positions up to where I need to be to start selling covered calls on them to get all these shares called away at a profit. So yeah, that is where I stand with my options plays right now and kind of my overall thoughts and strategy for my own situation here with options. If you are into options at all, let me know how you like to handle it down in the comment section below. Let me know what your strategies are and what you like to do. This page here, I'm just keeping an eye on a bunch of different positions, y'all can see. So once all these ARC funds are gone and once my TQQQ is gone, I will probably take a look at willing mainly SPLG, but yeah, I'm still a little bit up in the air about that as far as what I want to do in my Roth IRA. So yeah, I'm just trying to keep it relatively simple, relatively low stress as far as my option strategy goes. Let me know what you guys like to do in the comment section down below. Thanks for watching if you've made it all the way to the end of this video, and I'll catch you guys in my next one. Bye y'all.